So by the end of this video, you'll be ready to take your first trade trading indices. I'm personally a full-time indices trader. I make around $2,000 or $3,000 per day, and trading indices has brought me time, location, and financial freedom, as you can see. But I'm not here to flex on you. This video specifically is to turn you into a full-time indices trader, and I'm going to take you from absolute beginning to you taking your first trade live in the markets with my bulletproof strategy that I have never ever shared with anybody else. So with that being said, let's get into the video. So essentially, if you didn't know, this is TradingView, and here we're gonna be watching the markets. This is where we scout the price action. We're gonna scout the candles, which is these. We're not using Japanese candles for this strategy. We're not gonna use no indicators like these because indicators lag, they're not as real time. The candles tell us everything. So what we have to be focused on is market trends, because market trends is quite frankly the lifeblood of the markets. Okay, it's how these markets are built. There's the uptrend, downtrend, and consolidation. For us to make money, we have to be following the market trend. Okay, if the price moves up, it moves in higher highs, higher lows, higher highs, higher lows, higher highs, right? We have to be looking for buys in here. And if the price moves down, it moves in low lows, low highs, low lows, low highs, low lows. We have to look for sells in here, because naturally the price will continue down if it moves in downtrend, and it will continue up if it moves in uptrend, right? That's how it goes. You go with the flow. You do not have to always seek for that reversal like most traders do, because they think that they're the shit and then they get liquidated. All right, you have to be focused on following the market trend. And now what we do is we go to the session open. We have to see, is the price bullish or bearish? All right, in trends there's two parts that we have to be focused on. There's the impulse, retracement, impulse, retracement, impulse, right? So in the uptrend there's the higher highs, higher lows, higher highs, higher lows, higher highs, right? So impulse is the big move, the retracement is the small move. And the reason why we have to understand that is because when there's the impulse followed by retracement, a high appears. So essentially a high is created by an up candle followed by a down candle, the big move and the small move. Okay, very simple. It's like a pattern but not completely. And the reason why we have to understand that is because when there's an impulse retracement, the high, right? When a up candle body, the big part of the candle, not the wick, the body, closes above the most recent high, which is this one, something called a BOS, break of structure, will appear. Now, why is that important? Because in the uptrend, we can place long positions right here, or you can naturally wait for the price to retrace right here. You can enter. Okay, you may wonder, well, is that it? Well, yes, but obviously there's more to that. Okay, there's much more to that. Let's be honest, there's much more to that. But this is essentially the key opponent. Okay, follow the motherfucking trend. And in this video, I'm gonna tell you everything, so don't worry. So essentially, what we do is we follow the trend. If there's another break of structure, if this is a 1 minute time frame, for example, we're gonna see that new break of structure by spotting the high, which is up candle followed by down candle, impulse retracement, and impulse up candle body closes above the most recent high. That's a break of structure to the upside. And what we do, we buy above here on the up candle, or we wait for the price to retrace, because naturally it wants to do that because the price has to fix itself. It has to fix itself so you can get a better ratio. You're gonna buy right there. All right, that's how we follow the market to the upside in the uptrend. What about the downtrend? Well, glad you asked, because downtrend, low lows, low highs, low lows, low highs, low lows. Remember, big move is a impulse, small move is a retracement. Okay, let me show you. Impulse, retracement, impulse, retracement, impulse. Impulse, big move always. Retracement is the small move always. Okay, it doesn't matter if it's a bullish trend or a bearish trend. We have to be looking for those. And when a low appears in a constant downtrend, we have to see that down candle body close below the most recent low, because that's when a break of structure happens. BOS. Why again? Why is it important? Because after a break of structure, we can sell the markets. Let's say if this is a 1 minute time frame and we see that constant respect to the downside, we have to be following the trend, sell right here, or sell right here in the retracement for a better ratio. And what we target is liquidity. And very soon I'm gonna literally back test this strategy so you can see that it works, and so you can understand how to use it properly in the real markets. But before I tell you and show you how to do that, I have to tell you that you have to target liquidity, because liquidity is something that could switch the trend from an uptrend to a downtrend, from a downtrend to an uptrend, because liquidity is the motive behind the market movers. Market movers, big banks, institutions, and hedge funds, they want to take liquidity to fill their large positions, and that's how the markets operate, okay? That is how it goes, okay? And the way you spot liquidity couldn't be any easier than this, what I'm about to tell you. It's so easy. Liquidity rests above every high and below every low, and a low and a high is being created by two candles, okay? A high is being created by an up candle followed by a freaking down candle. This is a high, simple as that. Now keep this one thing in mind. We have to find these in the higher time frames, because higher time frames hold more power and influence. Let's say if this is a 15-minute time frame, that is cool. 15-minute time frame and up, they will hold liquidity. So literally this is a high that these big banks want to take. Okay, they want to take our liquidity so they can turn the uptrend to a downtrend potentially, because if they're happy enough with the liquidity, they will do that. And that's why we have to target the liquidity areas, because remember, liquidity can switch the trend. We don't want to be aiming blindly and then get stopped out because of liquidity. We don't want to be liquidity, we want to take liquidity with the banks, right? So essentially that's a high. A low is also two candles. That's a down candle followed by an up candle. Right, this is a low. And obviously the key is to find them in the higher time frames, so 15-minute time frame and up, that's my recommendation. And a low can turn, a higher time frame low can literally turn a downtrend to an uptrend. So like this, you're gonna be shorting in here, but once it takes the liquidity, you're gonna be targeting this liquidity, okay? And because literally, this is the motive behind the markets. Big banks want to take liquidity to fill their large positions. I'm sorry, man. I mean, I'm not sorry, but that's just how it goes. And now that you understand it, now you can target the liquidity. Now let me back this strategy. So if we go to the 1 minute time frame, because that's where I normally will enter the markets, as you can see, this is quite frankly a nice downtrend. How does the trend move? Low lows, low highs, low lows, low highs, low lows, low highs, low lows, low highs, and low lows, right? Now we have to obviously be trading in the session open. Let's say if this would be the session open, 9:30 till 11:30, I would say maximum. That's when you should trade. But this is not a perfect example because this is not in the session open, but you get the point, okay? You have to be trading in the session open. And as you can see, how do we follow the trend? We have to see the breaker structures, right? This is a down candle followed by an up candle. That's a low. Now, obviously, you may wonder, like, didn't lows have liquidity? Yes, but in the higher time frames, okay? In the lower time frames, you can just follow the trend with lows and highs, okay? So this is literally a low, aka impulse, retracement, impulse. What happens after this? This is a low, this is a down candle body. Remember, down candle body, the fat part of the candle closing below the most recent low, that's a breaker structure. So, naturally, I could enter right here with the stop loss above the most recent lower high, low high. And what I'm gonna target? I'm gonna target this liquidity low, because it could potentially switch the trend, alright? There we go. Man, couldn't get simple as this. I mean, this is fucking easy. This is so easy. Easy. Alright? And then let's say if you miss that trade. If you miss this trade, you can enter from this retracement right here and target the same liquidity. Because remember this. Impulse retracement. Just because the price will naturally do that. You can put it here. Guys, it's simple. Simple. Alright, let me show you in the option. Alright, what do we have here in the 1 minute time frame? We had some consolidation, sideways movement caused from equal amount of buyers and sellers in the market, pushing the price at the same time. But then we got these higher highs, higher lows, higher highs, higher lows, higher highs will continue. What exactly happens here? If you look closely, if you really look closely, this is an impulse retracement, aka up candle followed by down candle. That's a high. What happens after that? Up candle body close above that. So that's a breaker structure to the upside. I would then buy right here on the money. And what would I target? This high that I marked before, because I mean that's literally a 50-minute time frame high right here. As you can see, 50-minute high. So I would target that because it has liquidity, could potentially switch the market trend to the downside. Because remember, that's the key. That's literally the That's literally the reason why these markets move. The big banks want to take liquidity, right? Look at this. All right, a little bit consolidation. You take some time. There we go. Look at this. Now we took liquidity. Bang. Okay. Simple as that. Couldn't get easier than that. All right, guys. I'm telling you, what you have to do is follow the market trend. This is exactly how you trade indices in 2025, and I guarantee you, like literally, if you actually lock in, you backtest this strategy, you fix your psychology, you become profitable, you can get the freedom by following the market trend. But listen, if you actually want to become profitable like super fast, like this wasn't enough for you, let's say like that, you actually need someone to guide you, like me, who has been in these markets for years, literally 4 years, then click the first link in the description. Alright, like, comment, subscribe, and share this video to a friend or a family member who you want to see succeed. Alright, that's about that. As usual, I will see you on the other side. Peace out.